Yeah, hello everybody. Today I give you a little outlook for 2014, the stock market. How is it doing? What do you think? Good question. First of all, you don't know. You just can guess, because nobody knows exactly the future. And the second thing is, we are now 5 years in a bull market, in a rally. It's amazing. It's an amazing rally. The S&P 500 went up in 2013 30%, around about like 30%. And so for 2014, for this year, yeah, it can go up, it can go down, nobody knows. And but what can happen is, it can go up further. We can have another bull market here, and it can go up 20%, 30%, 10%. You don't know. Could be possible. It's probably not that unlikely, but there can also be some bad event. You never know. Like I don't know. Like. We can see a war or some disruption, whatever it is, and then the stock market will go down. So the best is, just for long-term investing, is just keep your positions. If the market goes down, add some more, or just save constantly. People assume wrong things. They say because it went year after year, it went up, the stock market, since that huge crash, for 5 years in a row. They say it's not possible. It's like in a casino, you play the casino, and 5 times in a row it's the color red. So this time it has to come, in this year, the other color, the black color on a roulette table. And these assumptions are wrong, because it's kind of 50-50, and it doesn't change because it's 4 times one color means the next time it comes the other color. So people assume wrong things. So overall, I'm very optimistic. Long term, the stock market, it shows for more than 100 years. If you look at the Dow Jones, the stock market goes up roughly for more than 100 years, 10% average. So long term, it is very beneficial to you, and generally to be very optimistic, to assume the 10%, and in real terms it would be like 6% roughly. Take out the inflation and the cost, so 6-7% real up movement, average a year, and nominal 10%. So you should be very optimistic. That's what I want to say. That the world population is growing, science is doing well, the employment rate is getting better. Also in the US, the economy is growing at least a little bit, and there are signs it's getting better overall. The companies are doing very well, so they have a huge cash holding. The costs are down in the companies, the margins are up, and so you can add another year. What you see also is, I have to admit that the valuations, the PE ratio, the price earnings ratio for stocks is a little bit high, but it doesn't mean in a bull market you have usually very optimistic outlook, and the people are euphoric. So that's why you can add another year that goes up. And I went to several banks as a journalist with a group of journalists, and we talked to the chief economist and the strategic analyst there, and they all are very optimistic, and they say they also see very optimistic in the future. It's kind of scary if everyone is optimistic, but I agree with them. But you never know. So it's a lot of guessing and assuming things. You never know. Something bad can happen anytime, next week, tomorrow, anytime. And so the stock market can tank. You have to think about it. Stocks are generally risky, kind of. And so there's no 100% guarantee. So that's why you have to diversify. You have to have many stocks out of, usually you should have out of many sectors in your portfolio. And so if you're diversified, you should do fine over the long run. And short term, nobody knows. It's what I said. It's a little bit guessing, but you should be optimistic, invest long term, and then you should do fine. And if you don't know about the perfect timing, what is actually not possible, just save constantly into stocks, buy them constantly, like with every bonus you get, or on a monthly basis you add to your positions, and or you can do on a yearly basis, or just if the stock market tanks, you add some more to your portfolio. And that's all for today, and I wish you a great year 2014, and hopefully the stock market will do very well. Okay, bye.